Hello everyone, welcome to today's market update with K Kim. My name is K Kim with the Traders Club, twotradersclub.com. Thanks for tuning in. I'm going to look at the market here and talk about why market is pulling back. Currently you're looking at S&P 500 daily chart, spider daily chart here. You can see that last 5-6 days or so we've been finding support right on that 10 EMA. And last market update video I talked about, we do have this kind of a continuation pattern, like a bull panic type of pattern. However, it's really hard to tell if this could break to the upside. I'd say that there's a 55% chance it could break to the upside and maybe 45, because it could go on either direction. We also talked about how we are dealing with kind of a overbought status in the minor term on the spider here, and we talked on last market update that we are dealing with this market. And I think by the time we did have the MACD crossing over to the downside, you can see the RSI coming down, and stochastic also was dealing with that crossing there. So we had that pressure. We were dealing with the overbought status, and you can see that Bollinger Bands kind of coming back down here in the price section, hitting that midline. Parabolic SIR has flipped back up to the upside there. So we talked about there is market, the price action, how that is staying above the 10 EMA. There's some buyers there in the micro term, but the pressure is building up, so there's a chance that it could break on either direction. However, the oscillators are telling us that we are dealing with the overbought status. So to this morning we came to the market, we gapped down, and then now we are breaking below the 10 EMA, and that's the blue line here, 10-day moving average. And then now you can see that 20-day moving average, which is exponential moving, as 20 EMAs holding up so far as a micro term support. So the question is, why the pullback? Well, first of all, we did talk about that oscillators being at overbought status, but really I think the banks, the financial sector, which is XLF here on the daily chart, is bound by this prominent resistance. See, every single indices that we look at, S&P 500, Dow Jones and Russell 2000, the NASDAQ, semiconductor, New York Stock Exchange, Wilshire 5000, everything we look at is every single indices, I would have to say, except the transport, are staying well above these resistance levels. Actually, like indices like S&P 500, indices like Dow Jones Industrial Average, indices like NASDAQ Composite, they are already reaching for that. Dow Jones and S&P 500 already made all-time highs and staying above. The semiconductor just through the roof. And Qs just hit that record all-time high level yesterday. It is the financial sector that the screen that you're looking at. It is the banks that has been lagging, that has been bound by this resistance level. There's still fear in this sector there. And you know what, you do want to see, in a healthy market, you do want to see the banks to do well. So I think this is a level, this was a concerning level because for the fact that financial sector was not able to get above this level. And I think that's why the overall market pulled back today, as the banks were not able to get above this level. So what are we looking at here? So what can we expect from this level looking at the banks? Obviously, the banks are at this level at 2371 resistance. There's a 2393 resistance level. We need to get above this level for this market to kind of see some more optimistic buyers coming in here. Obviously, the market has done so well last few months or so, but if the banks continues lower, I think that could drag the overall market down, including S&P 500, Dow Jones, and the Russell 2000 and the NASDAQ. So we're currently looking at a more of a mind-term perspective. We are trying to find support on that 20 EMA here. If we lose that level, there's a good chance we come back down to 50 EMA, that pink dotted line here, 50-day moving average. And also we have a lot of gaps there's that needs to be filled. Doesn't mean it has to be filled, but just keep that in mind. When the gap gets filled, it can act as an instant support. Sometimes this gap area can act as support. So let's say if this thing come down, continue lower next day, and then hits that 50 MA, if we bounce back up here, then this could act as support. But when it does bounce back up, you want to watch out that the downtrend resistance level and 2371 and 2393. Those are the resistance level to watch. Let's look at oscillators and see what they can tell us on the financials. You can see, the Bollinger Bands start to kind of squeeze a little bit here, and the price action back at that middle line of the Bollinger Bands. The question is, are we going to break through that middle line, or are we going to find support to the upside? We'll have to see how it plays out there in the next couple of days. MACD is seeing that kind of a minor term selling. You can see that bearish cross there to the downside. You see that. These two lines are crossing to the downside, so that's kind of a minor term selling. It's telling us that there's a minor term selling pressure there in that vicinity. RSI is also pulling back, and also stochastic, so we are working with that overbought status, and then we're pulling back here. So that's kind of what we're seeing on the banks here. Let's go to Dow Jones Industrial Average. Dow Jones Industrial Average is pulling back. And we actually lost 20 MA here. We're actually losing below the 20 MA on the Dow Jones, unlike S&P 500. S&P 500 is actually finding support, and that 20 MA. That 10 MA is calling back down. We're seeing, and Dow Jones seeing much more decline than S&P 500. You remember S&P 500, we moved sideways. The Dow Jones is actually pulling back. And so the question is, I think, are we, is Dow Jones coming down here to fill this gap? Because we already filled this gap right here. You see this? There was a gap right here. And I told you that just earlier that once the gap gets filled, it can act as instant support, and that's kind of what we're seeing. A little bit of wick here, kind of buying some very micro term buyers in that vicinity. I think if this thing continues lower, probably fill this gap. I think next level support to watch will be 180.07 on the Dow Jones here. Let's continue on the Qs. On the Qs, we do see that that 138.2% retracement, or the extension level on the Fibonacci. You can see it is acting as resistance here. So we came up, hit that, coming down here. So currently, though, looking at the Qs here, we were dealing with really overbought status in the minor term. I mean, that's pretty parabolic, if you ask me. That just pretty much went straight up, right? So right now, the 10-year, you can see the 10-year coming in. We're hitting that level, and it currently acting as a minor term support there, and that is a level of old resistance. So it's no surprise that currently we're kind of hanging out in that vicinity above the 114.46. So I think if we lose that level, there's a gap fill at about 113.82, and then another one at 112.23, and 20 MAs is residing in that vicinity at 112.77. So those are the levels to watch. If we start to really grind here, maybe form some kind of a bull pennant pattern, there could be another breakout to the upside. But again, like I said on the S&P 500, these pennant patterns are not very trustworthy for the favor of the buyers. Again, these patterns be probably 55 to 45 in my opinion. I mean, there's a slight chance that it could break up to the upside, but I think we really want to see which side it breaks if it does form something like that. I think the worst case scenario though, if this thing really comes down 110.57, you really want to see that level holding, and that's the level of 50 MA. But again, as of today, I'm not sure we're gonna come back as far as that. And many people are thinking we have a huge shooting star candle here, but it's interesting to note that only on the Qs we have the shooting star candle. If you look at a NASDAQ Composite Index itself, we don't have shooting star. We just have a little spinning top here, and so that's I don't think that's a huge deal. It's just a shooting star candle, right? It's not a shooting star candle. They're just like a spinning top there. Again, one day doesn't do a whole lot. So I wouldn't flip bearish on the overall market on the NASDAQ in the intermediate to prime just because we have that shooting star candle. It doesn't even look like that in the NASDAQ Composite Index itself. It could be some kind of error in the printing there. But anyway, 10 EMA is holding up there. Let me just look at oscillators real quick on the Qs and see what it looks like. Qs. MACD hasn't actually fully crossed, actually, and the price actually hasn't gotten back down to the middle line on the Bollinger Bands, meaning there's still kind of a some bullish pressure there. However, we are dealing with kind of extreme overbought status on the minor term. Okay, on the minor term. So also stochastic is telling us that we're dealing with the overbought status. So there's some selling pressure, some momentum from the buyers. So we're kind of seeing that war here, selling pressure from the minor term sellers taking some profits here. But then the momentum that we built last few months or so, seeing that possibly some dip buyers might be coming in. So 114.36 is to watch. If you lose at level 112-ish and then 110-ish after that. Lastly, I want to look at Russell 2000 to end this video. Russell 2000 has gotten above this lucidity here. That's a good sign. We are cultivating higher high there. And you know, with the intermediate term being an uptrend, you can see, and currently we're seeing the 20 MA acting as support right there. You see that 20 MA, we lost that 10 MA, and we're right on that 20 MA, which is a gap area also. So that's a potential support level. If we lose that level tomorrow, probably will fill that gap at 118.20. Remember what I said? Once the gap gets filled, you're probably going to see an instant support there tomorrow during the day if we do continue lower. So that's the level to watch. And then after that will be about 116.74-ish level here, right on that 50 MA. 50 MA is residing in that vicinity. So that level could act as strong resistance or support level. And it was resistance in the past. So it could be an old resistance becoming a new support there. But as again, if the buyers start to come in tomorrow, watch out that this thing start to come back up like this and kind of retest that 121.31, and then you might even stay here for a little bit or pull back. At this point, it's kind of hard to tell. We do have doji there, and then we do see a follow through. Could be some kind of an evening star reversal and could bring this thing back down here. But again, I am, over market looks bullish in the primary term. In the intermediate term, we're dealing with the minor term bearishness. So let's see how it plays out here. Again, Spider, next level to watch at 212.49 if this thing continues to lower. But if this thing finds support at 20 MA, obviously 216, 217 to retest. And you really have to watch if there's going to be a double top or not in the minor term, or if this is going to continue higher before you picking the direction either to the upside or downside. So, but again, I think we may see some volatility going into this week. We may see some selling pressure. Some minor term bears are coming in, taking this thing kind of possibly down. So some of those levels I just cover in this video to keeping in mind on some of the support levels. And again, these support levels that I'm talking about, they're not going to be a support level until you see a tangible bounce there. They're a potential level of support. So those are level to watch as a reference point, but not to be looked at as an absolute. Hope that makes sense. Hope that this update will find useful for you. And we'll see what happens this week, and then I'll come to you guys again either end of this week or next week and see where the market is at, and then we'll do a follow-up video. So until next time, have a great night. I'll see you guys next time. If you like the video, don't forget to subscribe on the YouTube channel, or you can follow me on StockTwist and Twitter at 2KKim, or my blog at 2tradersclub.com. And best way to really follow my articles and follow my videos is just go to 2tradersclub.com. That will be 2tradersclub.com, and you can sign up for article alerts right there. You can put your email address. You can click on Earlier Me, and every video I do, every article I write, you will get article alert in your email inbox, so you will not missing any of my articles, any of my videos. So that's the way to connect with me. Have a great night. I'll talk to you guys next time.